Good morning and welcome to Broker Briefing, Australia's premier platform for brokers and investors, providing networking and digital events for leading ASX listed companies. I'm Jane Morgan, and today you'll be hearing from four companies. So KGL Resources, Antilles Gold, Westgold Resources, and Olympio Metals. So up first, we are joined by KGL Resources with the ticker code KGL, a company focused on the development of their Jervois copper project in the Northern Territory. So to tell us more, today I am joined by Executive Chairman Dennis Wood. Good morning, Dennis.
Good morning. I hope all well. I've got 8 minutes. It's not very long, so let's get going.
Oh, wonderful. Let me bring up your presentation. When you're ready.
All right. So yes, you're right. I'm Executive Chairman. I've been with the company for 8 years, although I retired when I was 70. I only got away for 8 months before I had to come back. But well and truly experienced in this particular project and where it's heading. And quite frankly, talking about it in 8 minutes is going to be difficult. So let's go to the next slide. All right, guys and ladies. Oh no. All right. Well, the one that was just up there, I want to make it very clear is please take notice of the disclaimers and forward-looking positions on that notice. Obviously, we're a public company and there's some issues there that it really must be addressed. So let's forget that. I want to start by just talking about copper first, because given the amount of time I've got, the copper work could take miles longer. I took this job on 8 years ago because I was very well in touch and in charge or on top of copper production, particularly in the major mines in South America, and realised that copper was going to become very, very essential. And long and short of it is, me and the major shareholders agreed that what we do is focus on bringing this company into a 10-year mine life with a reasonable grade, if that was possible. Now, what we did do is for the last pretty well 6 years, we focused on exactly that, and we've brought it up to over a 10-year mine life with an average grade of 2%. Now, that 2% is very, very high, but the long and short of it is I was correct that the international copper producers are getting into trouble. They will be running out and their costs are starting to fly out the roof. What I didn't take into account is that going green, the way the governments globally are going to go, copper is even more essential. So there's not going to be enough copper produced, and there's going to be a much bigger demand for copper for the governments to reach their green requirements, going green requirements. Almost everything they do requires more copper. So I'm not going to talk about the detail. If you want to, we had a 40-odd page report that I did associated with one of our announcements we've done recently on the exploration. And it went to the federal government, and the federal government have really blessed it. And they are currently reassessing copper as a strategic mineral. And given what's happened globally and the number of other countries, including America, that have, I'm sure the Australian government will, and given our position going forward, with all our licenses, the deposits all chalked up, we've finished the fees, I'm sure we're going to get some help. But to take our position now forward, to start talking about this particular slide, we really do have, we're in Australia, we're in the Northern Territories, and Northern Territory, we've got all our licenses. We've got a large copper system with lots of potential, and at the moment, 23 million tonnes of copper resource, and it's still in the places we've been drilling open at depth. The high-grade copper reserve is 2.1%, which, if people know what's going on globally, that's in fact, when you look at some other places, we're almost 10 times better on our reserve quality. Now, we did finish a feasibility study last November, and that was reasonably positive. However, we've been doing a lot of extra optimising on that. Now, our site as well is highly prospective. We've got 3 particular areas that we're working on now, Reward, Bellbird and Rockface. But frankly, they're probably very small percentage of the potential deposit, which we'll talk about a bit later. We are employing an experienced team now. I brought 2 very experienced directors in when I took back over 18 months ago, and we're just employed a CFO and a CEO with a lot of experience, and we're getting ready now to take the project forward. We do have a Glencore offtake agreement, and the great bonus to that is that we're only trucking it to Mount Isa from where we are. So yeah, admittedly, it's a reasonable drive, but we're not having to ship it or rail it. So our carbon footprint, because of that, and because of the extra grade, is very good and okay. And we have a very supportive investment group. So next slide, please. So just looking at how we've got to where we are, I took over early in 2016. What we've done is focused on the copper alone. Now, there has been a lead zinc mine on site, and the pre-feas that was done before I turned up did have lead zinc in it. We certainly have lead zinc as a possibility, but because of the need for copper, we're focused on that to be able to get the finance to be able to build the project. So we started that in 2016 by focusing on a new deposit that I'd found at Rockface, and we continued doing that. Now, that took a couple of years to prove that it would be enough before we started the infill drilling. So in that time, I went and got the mining leases. I got our EIS approved. We did a pre-feasibility study. We've completed our arrangements and agreements with the traditional owners and the Central Land Council. We've acquired the lease around us, Uncle Creek, which has increased our potential quite significantly. Our EIS was lodged and passed. Our mine management plan's been accepted. We've got our underground and surface water licenses. So fundamentally, everything's been done, and we finished the fees last November. And what we've done since then is growing the team here and doing the optimizing, which we'll talk about in detail. So go to the next slide. All right, this is a quick summary of our copper resource. You'll see I joined the company late 2015, and quite frankly, the grades are all about 1%. And, you know, we realised, the shareholders at that time, which include me, of course, realised that that would not be enough. And what we'd found at Rockface was suggesting we could go higher. So fundamentally, for the next couple of years, I focused just on it. And quite frankly, I was really the only geologist working on it. We were a pretty small team because the company had run out of money for the 3rd time when I took it over, and I was underwriting the rights issue to get it going. But the long and short of it is it's worked lovely. We're up to 2% now, and fundamentally we did wipe a lot of the old resource out that was chalked because of the low grade nature on it, and that's helped bring the grade up. But we do now have a 11.5-year mine life. We are targeting 30,000 tonnes of copper a year, and we do have an offtake with Glencore. So next slide, please. This is the feasibility study highlights. Of course, what I'd suggest you do if you're interested, that you go to our last November, our announcement on this. The long and short of it is it does change a lot depending on where you think copper price is going to go, and where you think the exchange rate will go. They're both important. The long and short of it is where we did it fairly conservatively at what was predicted to be the copper price by the experts, and the exchange rate, which is meet future demand there, which is IRR of 40%. And but the bullish price forecast at the time would have taken it to 49%. But the details for all of this have been made public on our email address, web address. Next slide. All right. So what we have done, and you know, I'm very well aware, same as the board, of what happens if you start a construction like this company and not get it done on time. Delays, and you only got to look what's going on with builders in Australia and with the governments with their infrastructure and everything that's going on. You've got to get it done on time. So the main purpose of the optimising that we've got into has been working on our mine plan and the process plant, which I'll do a bit more detail on shortly. But we've also got optimising with our contract management. Because we're not a mining company, we are using tier 1 contractors for the process plant and the mining. Government support, we are certainly working on that, and we do expect the federal government to make copper a very strategic mineral. And we've also been looking at increasing the size and the grade of the resource. And what we have been working this year is to bring the first 2 years of mining up to measured status so that we would get finance. So the real purpose for the optimising is to make sure we can construct it on time. Next slide. All right, the mine plan optimising, to just be quick on this, we've expanded the current mines, but we've changed the mine plan from the fees. We're no longer bringing undergrounds in early. We're focusing on the open cuts. And as a consequence, I think I've reduced our mining costs. We've doubled the size of the mining equipment we were using. So we've halved the amount of labour for the open cuts. So the main big area of improvement here was that. So if we look at the next slide, we'll talk about the plant. I took the plant up from 1.6 to 2 million tonne a year because the open cuts are lower grade. And this will still allow us to stay at 30,000 tonnes of copper a year. We've optimize the flotation design, which is the majority of the processing, and we're using Jamison cells from Glencore, which we made in Australia, which will help reinforce that. But we've also redesigned the rest of it to look at optimizing it to reduce the amount of people that are necessary. So next one. Rock face potential at depth, you can see here, this is fundamentally the downhole EMs of rock face and the previous drilling and grades. And, it was getting a little bit weaker at the bottom. But what I did do this time around is I drilled a hole 575 there, 120 metres, I think it was, 130 metres below the mine plan. And it's come home at 5 metres at 2.43. The other two we drilled there come home, one of them come home at 12 at 2.6, and the other one was 3.59. So obviously increasing the depth at rock face is a real advantage, and it's potentially still going deeper. So we've got an opportunity here to keep expanding the potential at rock face. Next one. Bellbird, Reward, as I said, we've expanded the open cut, we've doubled the size of the equipment. The long and short of it is it's our largest deposit that we've got at the moment. And the funny thing is, from the structured J, it's the furthest one away, which is a bit unusual. But there's still plenty of copper resource around it. And including there, if you see downhole EM at Marshall Deeps, the downhole EM has been fairly positive for us at determining where the copper is, and in fact at rock face it was superb. But we do have plenty of chance to expand Reward's growth, but also there's potential of lead zinc there as well. There's quite a large amount of lead zinc around, and so go to the next one. Exploration potential. Look, that's it. We call it a J. You'll see there that just look at the picture. It's got a 2 white squares, or 2 lines around it. That's our 2 leases, the Jervois lease and the one I bought around it. That funny J structure going down towards the middle and bending round, that is all resource. That's about 14 kilometres long. You follow that ridge around, and there's a couple of ridges, about 3 for most of it, following it around a big J, and copper pretty well outcomes at the top of all of it. Plus, there's a lot of density and downhole EM gravity appointments underneath it. On the left side of that, going sort of pretty well vertically, but diagonally a little bit, you'll see a big fault. That's a massive Jervois fault that's actually moved 6 kilometres. and quite frankly is very responsible for what's happened in we're a 1.7 billion year old lease, highly metamorphosed, and the other side of that fault it sticks probably 300-400 meters out of the ground and runs along the whole western edge of our lease. That moved, as I said, 6 kilometers, and it's moved twice in its period. So quite frankly, all that structural move. Have we lost you?
No, you're still there.
Oh, okay. Well, the potential on the site is huge. I don't want to touch anything. Can you hear me and see it?
Yeah, we can still see you. We're still on the exploration program for 2024.
Okay, well, on that exploration program, I have focused for 8 years on the deposits we knew, the 3. They're on that there now. You can see the red and blue one. That's the reward one at the halfway up the J. And then down in the J, you've got one on one side, that's Bellbird, and then you've got Rockface. So we have only really focused on them, but there is plenty of other opportunity. And to my personal opinion is, after spending 8 years on the geology here, is I think a lot of the super stuff's going to be at much lower, and we're actually just about to start. Next year, we'll be looking at some of the lower opportunities. I guess I'm running out of time. The corporate structure, next slide. Oh, I guess it's there. All right, so the current share price is about 16 cents. It had been 70 before the copper price started to go back down and I left. We've got about 600 million shares. We've got a market cap getting on to 100 million. And the long and short of it is, we normally, if we're raising cash at the current level, the major shareholders are very, very solid and supportive. Most of them have been there since this company started, and that's years before I joined it. And they brought me in, funny enough, and a couple other major ones have come in since. And they're all here like I am, and that's to get this underway, to actually get it producing copper, because of the absolute definite need for copper, plus the absolute potential on this site of finding more. 16% of the company's institutional funds. I'm not a big fund supporter, although I do support Paradise a lot. They've supported me before, and they're 5.6%. 10% is owned by the directors. Pretty well all that's mine. KMP, the major shareholder of the Salam Group from Indonesia, and they've been a massive supporter of this project, this company, ever since it started. So the top 20 shareholders actually own 76%. And if you look to the graph on the left, you'll see that what has happened, which was totally not expected and predicted, is the copper price has come down, and that's sort of dragged our share price down with it. You can see there that the share price and copper price are in one-on-one. So I'm not sure, I've lost track of time, but I would think that's probably it, is it?
It is, Dennis. We've run completely over today, but that was a great presentation. And I would encourage webinar users to reach out to Dennis directly if they've got further questions via the contact details on the bottom of their ASX releases. But Dennis, thank you again for your time.
Thank you. Sorry I took too long.
It's okay. All right. So next up, we have a presentation from Antilles Gold with the ticker code AAU, a company focused on near-term gold production and copper exploration in Cuba. So to tell us more, today we are joined by Executive Chairman Brian Johnson. Good morning, Brian. Oh, Brian, are you here? We might have lost Brian. Oh, no, I think you're coming on. Brian, are you there?
Having trouble with the link, I'm afraid. Might be a second.
That's okay. While you're just joining, I'm going to bring up your presentation.
I'm having difficulty starting the video.
There you go, Brian. We can see you now.
Okay, excellent. Thank you. Sorry about that delay.
Okay, when you're ready, I'll let you jump into it.
Okay, fine. Thank you very much for inviting me to make this short presentation this morning. Antilles Gold is focused on Cuba, where we're participating in the near-term development of two mines with the total potential to produce around 180,000 ounces of gold equivalent per year. In addition, we control several exciting copper porphyry deposits that we've actually started drilling. So we can go to the first slide, if you may. Next one. Okay, we're often asked why we're investing in Cuba, and the short answer, I've given a few examples. Cuba is mineral rich, it's underexplored, it has low operating costs, and mining royalties are quite realistic. The government is very stable and encouraging foreign investment in the mining sector, and is backed by realistic mining and environmental regulations, and the partnership that we've developed de-risks permitting. It's very important. We have a number of investment incentives, including the waiving of income tax and import duties. That helps the economics of the projects. The foreign shareholder gets to nominate senior management for projects and exploration. And really importantly, one that I negotiated personally, that's not in others' joint ventures, I know, is that all project loans and sales proceeds have to be deposited in a foreign bank, and from there they disperse directly to creditors, which eliminates the country credit risk. I think a very important element of our JV agreement. We were invited by Minera in 2018 to participate in the development of their largest known gold deposit, called La Dimahagua. It's probably got about 2 million ounce gold equivalent, and half of that is going to an open pit operation. Over the last 5 years, we've developed excellent relationships with Minera, and this has resulted in transitioning from the concept of going in and doing one gold mine joint venture to actually establishing a jointly owned mining company that will develop a whole series of, we hope, gold and copper mines in addition to La Dimahagua. We've also been granted the opportunity to explore and possibly develop 4 concessions that host highly prospective copper gold porphyry deposits in what will be a majority owned joint venture. It's a matter of interest. Majors like Trafigura and Melbana Energy from Australia are heavily invested in producing projects in Cuba, and all are known to be looking to expand their projects. Next slide, please. I won't dwell on this one because of lack of time, but fundamentally we are chasing 2 near-term projects. One is the Nueva Sabana gold mine, small mine, low capex, produce about 50,000 ounces of gold initially. Second mine, La Dimahagua, which would produce potentially 100,000 ounces of gold in the doré, and then on to prospecting of what's known as the El Pilar porphyry system in central Cuba, and also 3 concessions in the Sierra Maestra copper belt in southeast Cuba. Next slide, please. Well, the first mine that we will develop with a high level of certainty is a Nueva Sabana mine. It's an open pit. It will be developed in the 50-50 joint venture company, Minera La Victoria. We have the benefit of 24,000 metres of historic drilling done by 2 Canadian companies, and 10,000 metres that we've completed just this month. We'll establish the MRE for the little mine in January 24, and anybody that's followed our company will know from recent drilling results that we've had outstanding grades for both the small gold cap and the underlying copper, and the copper zone is in fact increasing both laterally and vertically as we have continued the drilling. It will have a very low waste to ore ratio, this mine. The gold zone is outcropping gold from surface. We hope to produce, or expect to produce, I should really say, around 50,000 ounces of a good clean gold containing a good clean concentrate, very saleable, and around 9,000 tonnes. This will be followed by about 9,000 tonne of copper per year in a copper concentrate. The gold probably only lasts for 2 or 3 years. Copper, 6 to 7. We'll know better when the MRE is produced in January. Very low capital cost for this mine or whole development is only 23 million, including shareholders' equity of 3 million that has already been subscribed. The project funding of 20 million to construct the mine will probably be provided by an advance on concentrate sales by a commodities trader. And we're well advanced in discussions with 3 different parties on that prospect. Timing, scoping study will be completed in February, DFS in April, and the construction 10-month construction period is expected to commence in June 2024. Commissioning will be in around April 25 and will be the first cash flow for the joint venture, and a very welcome site that will be. Next slide, please. Oh, this is just a shot of the typical concentrator that will be provided by the contractor who will do this for us on a turnkey basis. So go to the next slide, please. The second mine that we'll develop will be the La Demahagua mine. It's based on a gold antimony silver deposit. There was 50,000 metres of historic drilling on this property when we inherited it. We did another 30,000 metres ourselves, and we have an MRE for the open pit of 905,000 ounces gold equivalent. As I said before, probably this will double for the underground, but this is subject to further exploration and definition. The concession is on an island, 60 nautical miles from the mainland, but the site is quite close to a port via sealed roads. It's connected already to water, electricity, and fibre optic cable. No occupancy. There's no people living on the site. So it's a nice, tidy site. The mining will produce 2 concentrates. One is 50,000 tonne of a gold arsenopyrite concentrate, and at the moment 7,600 tonne of a gold antimony concentrate for the 9-year open pit life. But we're working on increasing that antimony concentrate. It's probably going to finish up closer to 10,000 tonne per year, and it's a big earner because antimony is in great demand at the moment. We're going to build with this mine a 2-stage fluid bed roaster and a CIL circuit that have the combined capacity to produce around 100,000 ounces of gold per year. It will process 50,000 tonne of the La Demahagua concentrate, and we will import 25,000 tonne of a gold pyrite concentrate. The reason for the importation being twofold. One, it improves the economics, but more to the point, we need the additional iron units in that gold pyrite concentrate to stabilise the arsenic when it goes to the tailings. The estimated project cost is $145 million. 45 million of that is for the roaster and CIL plant. There's 27 million of shareholders' equity, 13.5 from Antilles Gold, and 13.5 of shares were issued to GM for the concession acquisition. The joint venture company has decided, and I think we've gone public about this, that we intend to attract a third shareholder, particularly focused on one with roaster experience, and that wouldn't happen till probably mid next year or third quarter of next year, and they would be required to pay fair value for those shares, which will be significantly higher, one would hope, than the $1 a share that we've invested to date. Those funds will go to construction. We also expect to get an arrangement with the equipment suppliers from China for deferred payments, which is equivalent to a loan. That would be supported by guarantees from the China Exim Bank. The estimated life of mine surplus cash is $600 million US. NPV is $330 million at $1,800 an ounce gold. And if we get diluted to 1/3 share from our current 50%, then our estimated surplus cash from this project would be about 300 million Australian from a very low 21 million investment. So good return. Planned construction commencements late 24 with commissioning in mid 2026. Next slide, please. We don't need to dwell on this one. This is just a shot of the group who are going to provide our turnkey basis the roaster. Move to the next slide, please. I'll just go quickly on the exploration side of things. We've been granted opportunity to, within an exploration agreement with Geominera, to explore what's known as the El Pilar porphyry system in central Cuba. Our own geologists have identified the surface exposure as to indicate copper gold porphyry intrusives. We have conducted a ground magnetics and induced polarization survey, and that's identified a cluster of 3 porphyries on this El Pilar concession. We've are drilling 6 holes into the El Pilar porphyry. 4 have been drilled to date. They've all demonstrated porphyry-style veining and have indicated good copper results, which I'll show you in a second. Drilling will be suspended after we complete the program next month until about mid-2024. That'll allow us time to negotiate the terms of the majority-owned joint venture, probably 75% for us, before the El Pilar concessions are transferred for further exploration and potential development. Next slide, please. These are just photos of surface veining of it indicates the porphyry. Next slide, please. You can see on the gold grades here that we've had fairly good copper results. Anything over 1% is very attractive in a porphyry, and you can see that we've had a sequence of events with well in excess of that, but very early days for this project, but great potential. Next slide, please. The last of our exploration focus is what it's known as the Sierra Maestra Copper Belt. It has a mine existing there since 1540. You heard right, 1540. It's a long-established mine, copper mine. We've got 3 concessions there. They're a long strike from the existing copper mine, but more to the point, the prospecting that we've done there indicates great potential for copper gold molybdenum. There are a lot of old workings and rock samples at the surface show it as a great prospect. We will start a prospecting program early next year on each of these 3 concessions. Next slide, please. I won't dwell on the people involved, but anyone that has a copy of this can understand, particularly in the management, quite apart from the directors. The management, if you go to the next slide, 2 particularly important directors. Dr. G, who's our technical director, has incredible knowledge of processing for refractory ores, as will be encountered at La Demahagua. And Chris Granger, our exploration director, who's actually based in Colombia. Great success in major explorations in that part of the world, and is absolutely wrapped in the potential of our copper prospects and geology generally in Cuba. Next slide, please. We won't need to dwell on the snapshot. Anyone who wants to have a look at our very humble share price can see that for themselves. Next slide, please. All I can say about that snapshot is that I believe our shares are well and truly undervalued. This is the last slide, you'll be pleased to hear, but our aim in points 1 and 2 is to over the next couple of years, develop these 2 mines that'll have between them about 180,000 ounces of gold equivalent per year of production. Obviously, that's shared at the moment 50-50 with the Cuban government's mining company, but that will probably bring us down to about a third. Underground mining could extend their La Demahagua project for around 9 years to nearly 20, and the additional upside for us lies in the potential of a majority holding in these highly prospective copper gold porphyry deposits. We're expecting that the copper exploration will be funded in part, at least, or by part of the cash flow that will be generated from the joint venture's gold production. But as 2 corporate moves we're working on at the moment, one is the possible investment of a new shareholder for a third interest in Nueva Sabana and La Demahagua, like a third interest in the joint venture company, effectively. And this will assist in project funding and indirectly will establish the value of our interest in these projects, so that maybe people will then start to realise just what value we've got within our assets in Cuba. The other corporate move that we're working on at the moment is the potential funding of the copper exploration that won't be insignificant, and the potential future partial sale of these properties. And that's being discussed with several major mining groups at the moment, but I can't say at this point in time that there is any certainty to those discussions, but that's a direction. But a corporate transaction in either of 6 or 7 points above there will highlight Cuba being an attractive jurisdiction, seen to be backed by majors, and it also reinforced the potential of our assets in that country. So you'd be pleased to hear that's the end of my presentation. I don't know how long I've taken.
Oh, that's okay, Brian. It was a great presentation. We've had a lot of questions come through, but we are running out of time. So just, I think, to wrap things up, what should investors be looking forward to from a news flow perspective over the next 3 months?
Well, news flow, I suppose the most important upcoming is in January, February, to see the value of the very small mine, but very profitable mine at Nueva Sabana. Very little money required from us going forward. So those two announcements will be quite important. The next one will be a few months later when the test work is completed for the roaster CIL attachment to La Demahagua. That'll result in a scoping study once we have those metallurgical test work results, probably April, May. But we're very confident of the results on that project because we've already got indicative capital costs and operating costs from the turnkey specialist engineering group in China that will actually build the projects. So that's fundamentally it. More of the same.
Wonderful. Well, exciting times ahead. And again, if we have missed any of your questions, please feel free to reach out via the contact details on the bottom of the ASX releases. But thank you again for joining us.
Okay, thank you. Thank you all for watching the presentation. Thank you.
So next up, we have a presentation from Westgold Resources with a ticker code WGX, a growth-orientated WA gold producer. So to tell us more, today we are joined by Managing Director, Wayne Bramwell. Good afternoon, Wayne.
Good afternoon, Jane. From Cuba to Kew in Western Australia.
Lovely. Let me bring up your presentation.
Thank you. Okay, if we can just jump forward to 3 slides. One more. Great place to start. Thanks very much for the time today and the opportunity to tell the Westgold story. Westgold is a West Australian gold producer, and the value proposition in some sense is quite simple. The business is now profitable, producing 257,000 ounces of gold last year at an all-in sustaining cost of just under 2,000. Currently, and these are AUD, at the end of September, we are sitting on $217 million worth of cash. Importantly, we're debt-free and fully leveraged to the gold price, meaning there's no fixed forwards in place. We now collect every dollar of the $8 gold price, and we sold gold this week at 3,015, likely to sell gold today at 3,080 Aussie dollars. Importantly, in terms of building value over the last 12 months, for the first time since 2017, we've grown our mineral resource. That was a function of spending $19 million on drilling last year, and with that drilling, we increased the grade of our reserve. Something key, a key differentiator for Westgold is we mine our own ore bodies with our own people and our own equipment. We're vertically integrated. We've got a specialist underground expertise, and that gives us an advantage when it comes to underground mining. Next slide. The business, all West Australian assets, where many of our peers have offshore assets. Our home is WA, and really our assets sit between the regional towns of Kew and Meekatharra. And looking at this slide, think of the business this way. 50,000 ounces per annum comes from the Briar operations. That's a single processing plant and 1 underground mine. The other box between Kew and Meekatharra, 2 processing plants generating around 210,000 ounces per year. Next slide. The share price has performed, has outperformed our peers in the last 12 months. And this is really a function of us starting to hit our targets and delivering on what we tell the market we were going to do. The business in the last 12 months has gone through a significant turnaround, and I'll talk a little bit to that on the next slide. But the long story short, there's still a lot of headroom in terms of where we think the value of the stock is, because this company still trades at a discount to its peers. Next slide. Westgold set about some significant changes in the last financial year. We refreshed the board and the management team. We focused very much on improving our safety culture here and took a far more disciplined approach to the way we were operating our mines. We've delivered our production and cost guidance for 2 years in a row. That's starting to build some trust in the stock again in terms of our ability to deliver. Most importantly, in July this year, our fixed forward program, which has been the burden of many Aussie gold producers, was finished. So as I said, fully exposed to the gold price going forward. We've now built cash on our balance sheet for 3 quarters in a row and are set to do that again this quarter. Next slide. Our approach to safety has been significant, and one key metric when comparing many gold companies is this TRIFR rate, total reported injury frequency rate. In some sense, 2 years ago was extremely high. That made the business uninvestable for many, and also a difficult sell when it was coming to employing people. Very happy to say now that our TRIFR is better than many of our peers and trending down. And comparatively, what does a good TRIFR rate look like for Aussie mid-cap golds? Somewhere between 9 and 4. Where it's sitting at 8, pushing down to 7, I believe we can get our safety rate down to around 5. Next slide. Cost. Again, all Australian gold producers are price takers. It's not something we can control, but the good news is at the moment, with the Australian gold price being over 3,000, we collect every cent of that. For the last 12 to 18 months, we've been really focused on driving costs out of the business. That's really about trying to find more efficiencies. And this slide simplistically shows July 2022, our cost, all-in sustaining costs on a monthly basis being around $47 million. We've now been tracking down for over 18 months. And this slide is trying to show the reader that in terms of being on top of our costs, this business is. We had to get on top of our costs because we were a high-cost producer. The target for this year is to deliver at the bottom end of our cost guidance, which with a cost guidance range of 1,800 to 2,000. Next slide. This has been the game changer for the business over the last 12 months. We've underinvested in drilling for 5 years. Previously, last year was the first year that we really got busy in terms of trying to replace the gold that we were mining. And I'm happy to say we were successful in terms of lifting the resource number and lifting the reserve grade. Under investment in drilling for 5 years, you can't fix in 1 year. So last year, again, we basically stabilized things. This current financial year, we expect to see our reserve grade or our reserve ounces grow, currently sitting at 2 million ounces. Next slide. This is probably the most important slide in the whole deck, and it's really showing the cash build in the business. We set about a strategy in the previous financial year to change our cost structure, drive cost out, become more efficient, become more disciplined about what we do. We did. We closed 3 mines in FY23, underperforming mines. I'm happy to say we've brought one of those back. There's another one which is sitting there ready to go. The significant change that shareholders have seen in the business in the last 12 months has been Westgold's ability to add cash to the balance sheet. I've said before that we're 3 quarters into this turnaround. We've been building cash every quarter, and the business is now structured to consistently deliver cash to the bottom line. Next slide. What's our plan to close the trading gap that Westgold has against its peers? It's really simple. Continuing to deliver, continuing to invest in the parts of the business which actually drives cost out, makes us more efficient, and continuing to invest in our people. Key to changing the perception about our company, and for some, this is a new old story because Westgold has been around since 2017, is showing that it can consistently build cash, it can consistently extend its mine lives, and continually show returns to the shareholders. In FY24, the current year, after FY23's turnaround, our focus really now is about investing in our people. And that's not just about paying them more, that's about providing more opportunities for them, increased training, increased benefits, because for those of you not living in Western Australia, there's a war on talent in WA, and we are finding ways and novel ways to try and compete to make sure we've got the best people operating our mines. Next slide. Changing the perception of the business has also, as I said, been driven by drilling. Really happy and really proud to say in the last 12 months, we've actually we've done some really great things. Great Fingal is one of the highest grade mines ever done in Western Australia. For those, it is a name that is well known in this part of the country, and it was a very proud day in August this year when the board approved the development of this mine. This mine has a 12 to 18 month lead time. We started this mine in October. We're expecting it to generate 50,000 ounces of gold at an all-in cost of around $1,800 an ounce from FY25. Only this week did we announce the expansion of our largest asset, Big Bell. The Big Bell expansion is something that we've been working on for 2 years, and it was another significant day this week to announce that the board had approved the expansion of this mine. Big Bell now has 16 years mine life in front of it, and that's a significant change for where it had been. There's very few mines in WA that can boast 16 years of life ahead of it, and with Big Bell now defined over 16 years, it locks down one end of our business and gives us a lot more flexibility as to what we do. The other change in the business over the last 12 to 18 months has been the start of a new mine called Bluebird at Meekatharra. This was a small mine originally, 250,000 tonnes per annum, at around 4 grams per tonne, an underground mine like all of our assets, which we've doubled in scale in the last 12 months. We've been drilling this mine and operating it concurrently, drilling it with 3 rigs for over 12 months now. We think we can make this mine bigger, and there'll be an announcement in the new year about, again, increasing the scale of this project. Next slide. A significant way to drive cost out of the business, and our business, like most underground miners, is dominated by diesel consumption. Our projects are not on any national grid, so they've been predominantly powered by diesel-fired power stations. Being our own underground miner and having 140 pieces of underground gear, we used to consume a lot of diesel, 8.5 million litres a month to be exact. In the last 12 months, we've been working with a group called Pacific Energy in terms of helping us transition to gas, solar and battery power to power the bulk of our operations. 2 of these hybrid power stations are now fully online. Over the next few months, the other 2 power stations will come online. What does this do for us? It basically drives diesel out of our business, or drives our consumption down, currently sitting at around 3 million litres a month, soon to be 2 by the end of the year. It drives emissions out of our business, but most importantly, it drives our costs down. And the transition to these hybrid stations should drive between $60 and $80, $60 and $100 an ounce out of our all-in sustaining cost. Next slide. We speak to this slide about the change of the dividend policy as evidence that the business is now starting to become more sustainable. Westgold had paid a dividend in FY21, and now we've structured to be able to consistently pay returns to our shareholders under these terms. My gut feel is that in February, once we announce the half-year results, we'll be in a position to pay the first dividend under these terms to the shareholders. Half-year numbers are finalised in January, audited and signed off in February. That'll be a time where we'll make an announcement about a dividend payment. Next slide. The last slide. I've tried to keep this short and punchy. I encourage anyone who's interested in Westgold to hit our website or check out our social media. But the strategy for FY24 is really simple. Continue to build free cash. Free cash and building our cash balance gives us optionality over expanding our current asset package, increasing our drilling, and also gives us optionality over inorganic opportunities which we see emerging. The focus is still the same, trying to drive efficiencies up, cost out. How do we leverage our existing capital better to generate a higher return for our shareholders? We won't slow down on drilling. This year, the budget is $20 to $25 million, and I want the exploration team to spend every cent of that, because the 19 that we spent last year generated a fantastic return corporately, and we'll do so again this year. We'll continue to invest in technology that reduces our costs. The last 12 months has not all been about slashing costs. It's been about being smart about where we deploy our capital. The clean energy project and these hybrid power stations has been key to that. The other key investment has been into underground loaders, which are now hybrid diesel electric. We love these new Caterpillar machines because they use less diesel, they're more powerful, they put less emissions into our mines, and they're just good business. That drilling is also really focused on continuing to increase the mine life of our current assets. And as we sit here today, Big Bell, 16 years. Great Fingal starts life with an 8-year life. Bluebird, 3 years and growing. Starlight, 3 years and growing. Fender, a small mine at Kew, 3 years. Paddy's Flat, 2 to 3 years. So we are very much focused on drilling these assets, and we do that with our own people and our own equipment. In terms of M&A, which is a question we get asked often, my response is this. M&A is a complicated way of buying things. What we've found by spending time drilling our own assets is a lot of our assets are under-drilled, and our M&A metric is looking at spending $1 on our own assets versus spending $1 on other people's. We've yet to find a better opportunity than our own. Next slide. Really, that's the Westgold story. It's a very simple story. We're on track to deliver 265,000 ounces of gold in this financial year. We're targeting the bottom end of our guidance, somewhere between 1,800 and 1,900 all in Aussie dollars, all in per ounce. We are debt free. We are unhedged. We've recently announced that we've got a $100 million corporate facility provided to us by Societe Generale and ING banks. So we've got plenty of horsepower to invest in our own assets or to take advantage of opportunities we see emerging. Jane, that's the Westgold story.
Wayne, what a great presentation and a great company, which is pretty evident by the share price growth that you've had over the past few years. But let me just quickly jump into it, and perhaps maybe one you might not be able to. Oh no, you've answered a lot of the questions already. But so you talked about investing in organic growth. So what drilling programs have you got planned for 2024?
As we sit here today, we've got 10 rigs across our package, 3 rigs drilling our Bluebird mine intensively. The Bluebird mine is literally a few hundred meters away from the Bluebird processing plant. It's a shallow mine. In some sense, we can't drill a bad hole there, but that is a place where we can add reserve ounces very, very quickly. We will do some more drilling in Great Fingal. We'll do some more deeper drilling in Big Bell, but we're also starting to do greenfield work, looking for the next suite of assets. So prime focus of the 25 million budget, 75% of that is basically drilling and extending the mine lives of our existing mines, making our bigger mines bigger. 25% of that 25 million is really focused on greenfield stuff within the package of between Fortnum, Kew and Meekatharra.
Wonderful. Well, looks like you've got a lot of news flow coming into the new year as well. But anyway, again, great presentation, and thank you for joining us on Broker Briefing.
Thank you very much, Jane. And again, hit the website for anyone who's interested in more information.
Wonderful. So next up, we have a presentation from Olympio Metals with the ticker code OLY, a company focused on lithium and rare earth exploration. To tell us more, today I'm joined by Managing Director, Sean Delaney. Good afternoon, Sean. Oh, you're a little bit soft there. I might just get you to turn up your
I'll have to speak
Are
up
you
on
there?
my, yeah,
There,
can you hear
there
me?
we go. Absolutely,
Yeah.
that's much better. Let me bring up your presentation.
Thank you. So
When you're
yes,
ready.
Olympio Metals, yeah, critical minerals explorer in Australia and Canada, as Jane just said, Jeff. So we'll just skip forward a couple of slides, please. So I guess our focus is on yeah, like I said, on critical minerals. We have a project called the Cadillac project in Quebec, which we acquired just in August this year, and that's you know, a lithium project. I guess Quebec is, you know, an excellent jurisdiction for lithium exploration. We have the Aurelia Rare Earths project in South Australia, which we acquired in November last year, which is carbonatite hosted rare earths project, which you know, we're drilling there right now. So that's pretty exciting. We have Mulwaree project, which is just north of Kalgoorlie. You know, well-established gold exploration, but now becoming a very interesting lithium area with all the corporates and activity that's been going on there over the last few months. And we've got a farming agreement with Liontown over our Mulwaree project there. So obviously that's you know, we're super excited about what they can find there, and the Halls Creek Gold project, which is one of our listing projects. So next slide, please. So yeah, it looks a small company, you know, 78.8 million shares on issue. Like I said, we're only 18 months old, you know, market cap about 10 million, yeah, 3.5 million in cash at the end of September. So 6.4 million EV. So it's a small company. Next slide, please. So yeah, so the board, Simon Andrews, the chairman, Aidan Patel, who's the MD of Charger, is non-exec director, and myself. Yeah, so we have, you know, lithium exploration on the, our experience rather, on the board. So next slide, please. So next slide. So I'll just go through these projects basically on a high level. You know, given the time restriction, I guess. So the Cadillac Lithium project in southwest Quebec. So we bought that project, as I said, in August this year. So why did we buy it? Well, I mean, there was a big sort of significant push into Quebec, you know, over the last 6 or 8 months, really, with the success of Patriot, I suppose, and Winsome there, and their super discoveries up in James Bay. But yeah, look, we were looking for a project that was perhaps a little bit more advanced, and location is the key. So this project is, you know, 50 kilometers out of Val d'Or, which is a town very similar to Kalgoorlie, mining sort of town, 30,000 people. You know, this project's got road access all year round, access, you know, no helicopters required. And more importantly, it had spodumene on the surface and in drilling from the work that was done by Vision Lithium, who are the you know, the vendors of the project. So yeah, really, look, we looked at a lot of opportunities and just thought, okay, here's a chance to acquire a project that's got known lithium, and the location is fabulous. It's as I say, just out of town, so you've got opportunity, you've got infrastructure there. So really, any discovery there, you know, is going to give you enormous chance of sort of development based on the infrastructure. Yeah, next slide, please. So this is just a close-up of where the project is. It's within Sayona's Abitibi hub, they call it. So it's less than 100 kilometers from the only operating mine in lithium mine rather, in Canada. So yeah, look, as I said, we acquired it from Vision Lithium, who had they've got 2 other more advanced lithium projects. So really, you know, they've become our major shareholder in this acquisition. You know, their sort of their chairman and CEO also participated in, you know, the fundraising that we completed in August at 18 cents to acquire the project. So yeah, look, that just gives us great confidence that they weren't sort of you know, selling the project for the wrong reasons, if you like. They're still a significant sort of participant. So yeah, great location, known spodumene, near the surface and in drilling. So yeah, we really like the opportunity there. Next slide, please. So this is just an example of some of the work that they've done on the A, B, and C dike in this little prospect, which is sort of in the northern end called Wells Le Creuset. You know, sort of 3.14, you know, 6 meters at 1% Li2O in drilling. So basically, I guess, as I said before, what it's proven to us is that there's you know, there's spodumene there on the surface, and in the drilling. So, you know, my very sort of simplistic analysis of lithium exploration, the best place to find you know, lithium is basically where you know it already exists. So that was really the attraction of buying this buying the project. Next slide, please. So this is, you can see the Wells Le Creuset there in the northern part, and two sort of areas of priority areas for exploration. Vision Lithium had spent quite a bit of money. They had LiDAR mapping sort of done all throughout the project, and a significant sort of sampling done on the southwestern end. But basically, the LiDAR has identified, you know, over 400 pegmatites throughout this project, which just means that there's pegmatites sort of sticking out of the ground everywhere. There's targets galore in the southwest there. They've got through a sort of very significant sampling program they've done. They've identified numerous fractionated pegmatite targets there, which all require sort of follow up. But really, what we've been focusing on is just sort of fanning out from the known high-grade spodumene in the northeast or in the northern part at Wells Le Creuset. So we acquired the project in August, got on the ground straight away, and you know, we've had teams out there, you know, working as hard as possible to generate targets. Next slide, please. So this is a close-up of the Wells Le Creuset, the sort of where the high-grade spodumene is, and we've just, as I said, fanned out from there. And just using handheld XRF and libs in the field. We've had a couple of field crews on there using local crews that are based in Val d'Or. And so, yeah, our most recent announcement talked about this Dike Z, which you can see on the sort of southern part of the figure there, which is really which is a 1.3 kilometer sort of fractionated pegmatite dike. You know, it's up to 150 meters wide. It's massive, and that really just gives us the potential for scale if you know, if the drilling comes in. So what we're doing right now is we're going through an approvals process to basically to get our first sort of drilling program happening there. We've got the M zone dikes there, which you can see in sort of in the middle of that figure. We've got a dike Z, so we're just going to drill on the top of that dike where we've got sort of numerous target areas based on the field work that we've done. So we're super excited to get some rigs out there in January. It's you know, it's very cold in that part of the world in the winter months, but they're very experienced with their drilling through winter. And in fact, most of the drilling that they do in Quebec is all through winter, you know, mainly because the place freezes over and you can get access, which is not an issue for us, but because there's a road right down through the middle of the project. But yeah, so we're super excited to be drilling on this project, starting likely January, as soon as the approvals are all in place. Next slide, please. So the Aurelia project, as I said, in South Australia. Look, it's a rare earth project that we identified, you know, through the South Australian sort of mines department. We did a deal on one tenement there for an earning, and then basically we pegged this tenement to the south, and we pegged a tenement to the north. Yeah, but this is really sort of you know, ground that's been explored for diamonds, you know, by Stockdale and Flinders over many years. So it's never been sort of the focus of rare earths. But amazingly, once we did this agreement on the deal, we looked to the south, and the ground that was vacant contained the Wallaway carbonatite, which is actually one of you know, the 8 sort of known carbonatites in Western Australia, including Mount Weld. And we were just amazed that ground is vacant. So we pegged that ground, and I guess that's 100% ours. And we pegged a tenement to the north, which we call Yan Yari, which is obviously 100% ours. So next slide, please. So this is some of the exploration work. Look, once we picked the project up, we found there was was 200 samples sitting in a house in Adelaide, which had been sort of taken for diamonds over the years, and so we assayed those. We were able to assay those samples from trenches, and you know, that just gave us great confidence that there's rare earth potential in this project. As you can see, you know, to the Aurelia tenement, the one we've got the agreement on, then Wallaway, including the Wallaway carbonatite to the south, and then Yanyeri to the north. So really, this is, again, it's a great location. It's only 100 sort of kilometers east of Port Augusta. You're probably 4 hours drive out of Adelaide on, you know, on marginal farmland, if you like. So it's a great location for exploration. And you know, I guess we figured that carbonatite hosted rare earths is really where it's at. You know, and if you look at the success of WA1 at their Arunta project, and that sort of, I guess, gave us confidence that carbonatite exploration is you know, where we believe that there's significant upside. And next slide, please. So yeah, these are just some of the results that we got from the drilling that we completed in May on the Earnin tenement. So, you know, reasonable 9 at 1189 ppm TREO. So just sort of validated our theory that there's a sort of a primary host there. This project is on sort of very deep plumbing, if you like, in the same sort of structure as Olympic Dam. So, you know, if carbonatite hosted rare earths requires very deep plumbing, this just really sort of validated our you know, our theory that there is that there's a primary source to the rare earths there. So next slide, please. So we basically completed a detailed aeronautic a drone magnetic survey on over Wallaway, and on the project to the south. That's 100% ours. And this is just some of the magnetic sort of signatures, I guess, if you like. So you know,
Sean, are you there? Oh, have we lost you?
Can you hear me, Jack?
Yep, that's better. Sorry. Jump back into it.
So okay, so I'm having some problem with my internet connection. I just heard. Can you hear me now?
Yes, we can hear you. That's better.
Yeah. So the magnetic modeling just demonstrates that there's significant magma bodies, you know, deep down. So we're drilling there right at the moment. We've got an air core rig just going around doing some shallower drilling on various mag targets. So yeah, we're very excited to see what that air core drilling turns up. Next slide, please. So this is just a carbonatite story. Carbonatite, as I say, WA1, if you follow that story, Mount Weld is a carbonatite in the kimberlite field, Mountain Pass. So there's been significant success of carbonatite exploration globally over many years. Next slide, please. So the Mulwaree project, yes, which is just 120 kilometers north, you know, northwest of Kalgoorlie. Next slide. So this next slide is really just a demonstration of all the you know, the lithium assets which are you know, in the greenstones next to the granites in the Yilgarn sort of region, southwest of Western Australia. Obviously, a significant area of interest. I mean, Wesfarmers have just done a significant deal for the ground that's all around it with Ora Banda, Minres, Pantoro. So there's been significant corporate activity. Anyone who watches the lithium space would be aware. Next slide, please. So this just shows our tenements here, which, as I said, we've got a farm in agreement with Liontown. They've completed 1,100 samples over all the greenstone areas in the Mulwaree and Mulline prospects there. They've completed all the sampling, and they're basically just analysing the work. And so yeah, we're expecting a decision one way or another, and then progressing to stage 1. Further exploration on this project, which we think it's a great deal for Olympio shareholders. You know, we get you know, if they decide to proceed with stage 1, we get to stay in at 49%, so they would get to 51% on stage 1, which gives us a significant upside to any discovery. and also Liontown, significant exploration, significant lithium experience, and it just means that we can look after Quebec and South Australia, and Liontown are doing the work on this Mulwarry project for us in Western Australia, which we think is a great deal for our shareholders. Next slide, please. So Halls Creek project, yeah, next slide. So I won't spend too much time on this, but this is gold. This is a gold project in the East Kimberley region of Western Australia, which we did some drilling there a couple of months ago. We announced some results there. We got 1 meter at 18 grams per ton, which is obviously encouraging when you're getting 18 grams per ton gold in drilling, but those details are in our releases. The next slide, please. So that's really, so this is really just a summary, I guess, of Olympio, where we're at. We've got lithium in Quebec, drilling there in January. We've got rare earths in South Australia. We're drilling there this month. Carbonatite hosted. So we love that project. And we've got Liontown, looking at our Mulwarry project in Western Australia. So we've got significant news flow coming. We've got a tight capital structure, 78.8 million shares of Vision Lithium. As I said, the vendor of the Quebec project are our significant shareholder now. We also have the Lithium Royalty Corporation and Atlas Group as two significant institutions holding major parts. A very tight register, strong support from Canaccord through a recent capital raising for the acquisition of the Quebec project, and we think we've got the technical team to deliver. So next slide. And so that's the summary of Olympio Metals, and my contact details are on here. So feel free to make contact if any questions about the projects or other things that we're doing or other opportunities. Thank you, Jane.
Sean, what a great presentation. Thank you for that. We've had a few questions come through, so let me jump into them. So with drilling due to commence at Cadillac in January 2024, what's the timeline required to define a resource?
Wow, yeah, well, look, yeah. So we're jumping ahead there. We'll
very much, yeah.
Yeah, I'd say that's jumping ahead. But look, I mean, as I said, we have some very large targets there with that DIG-Z that we've identified, which is 1.3 kilometers. So I mean, depending on success, the success of the drilling, that we're doing in January will really sort of drive the exploration program. If we look, Victor Cantori, who's the chairman of Vision, said to me, look, he loves the way the Australians do business. They come over to Canada and they're not afraid to drill holes in the ground. So he said, we said we want to put some drilling in here, and we're sort of very supportive of that. So yeah, look, that's our aim. The drilling, this first sort of scout drilling, if you like, in January will really drive the exploration program for the rest of the year. So, but yeah, we won't talk about a resource yet until we see some results. So.
Well, just further to that then. So what is the campaign in January 2024 again, just to reiterate?
Well, look, we're probably going to do about 3,000 meters in just sort of in just some scout drilling, if you like. We're real, the geologists will hate this, but you're able to drive up on top of this sort of pegmatite, and we're just going to drill down, just down dip, really just to test some areas of it. And then move on to that M zone. So very sort of significant, size, target. So what that means, I guess, if you have success, you've got opportunity for scale, so in terms of tons, so you're not just talking about sort of smaller targets. So yeah, we're planning, say 3,000 meters, in 5 or 6 locations based on sort of our priority targets.
Good campaign. And so just based on the drilling success, is there an option, or is the company looking to expand the land holding at Cadillac?
Well, we have 190 square kilometers, so 334. So the land holding is sort of significant, and that's sort of the total of Vision's lithium sort of project there. So it's an option, but effectively we have to spend 500,000 in the 12 months. So really we've bought the project. So yeah, look, I mean, of course, we're always open to opportunities, looking for new ideas, but it is a very significant land holding that we'll be exploring in the southwest, and further expanding that exploration all through next year. So significant land package to be explored there already.
Absolutely. Okay, jumping around a bit here. So Wallaway, air core drilling has been completed. When can we expect the results of that campaign?
Well, the drilling's ongoing, so yeah. Look, I mean, with the time that assays taken, all the rest, yeah, it'll likely be the new year, before we'll have anything to announce there. So, yeah, so we'll be waiting in anticipation for results from the drilling there.
Wonderful. Well, Sean, that's all the questions that we have for today. And as Sean mentioned, please feel free to reach out via the contact details on the presentation, which I assume was lodged with the ASX today. But thank you again for joining us.
And apologies for the internet connection. I don't know what happened in the middle there, but I'm in the office, but it just dropped out. So
it happens to the best of us. Don't worry.
Yeah.
Thank you again. Good luck with the programs.
Thank you, Jen. Thanks for everybody for tuning in.
Wonderful. And thank you all for joining us today for Broker Briefing Mining and Resources Investor Webinar. Recordings of today's presentations will be available online in the coming days on brokerbriefing.com and our YouTube channel. And we look forward to hosting you again next time.